My name is Ahmad Zulfan bin Ahmad Muiz and my meeting number is 122462. Introduction. Astro Malaysia Holding Berhad, Malaysia's top content and entertainment group, reaches 5.3 million households, 97% of TV households, and 8,400 companies. It has 18.2 million weekly FM and online listeners and 15.6 million monthly digital visitors. Astro offers a full range of video service through Astro Pay TV, Enjoy and Soccer. Next, Bermas. Established as Bermas Motor Seri Berhad in 1998, Bermas Auto Berhad B Auto is Malaysia's leading automotive business as the exclusive distributor of Mazda. Bermas imports and distributes Mazda vehicle and parts in Malaysia and the Philippines. It went public in 2013 on Bursa Malaysia, expanding operation with a broad dollar network and service outlets. Bermas is recognized for its commitment to customer satisfaction, technological investment and sustainability, winning numerous business awards. Next, CIMB. Incorporated in 1974 and headquartered in Kuala Lumpur, CIMB Group is a leading bank known for its consumer, investment and Islamic banking, with about 16,100 staff and 270 branches in Malaysia. It serves over 8 million customers. CIMB offer retail, consumer, SME banking, insurance, investment and wealth management. CIMB Islamic provide value-based financial solution across Asia, while CIMB Investment Bank operates in 12 countries.
Astro financial performance from 2021 to 2023 show a significant decline in non-current assets, primarily due to reduced investment in subsidiaries and decreased deferred tax asset, reflecting potential divestment and financial restructuring. Current assets also dropped sharply, with notable decrease in receivable and cash balances, possibly indicating lower revenue or increased spending. Despite rising payable, the elimination of borrowing led to a reduction in current liability, suggesting debt repayment effort. However, the decline in net current asset and overall net asset point to liquidity challenges. The capital structure remains stable in terms of share capital, but return earnings turned negative by 2023, signaling potential losses or high dividend payout. Overall, the steady decrease in total equity highlight a weakening financial position, necessitating a review of financial strategy to ensure stability and growth. Astro income statement from 2021 to 2023 show a consistent decline in revenue, indicating potential market challenges. Although the cost of sale also decreased, it did so at a slower pace, leading to a significant drop in gross profit. Effort to control administrative expenses were evident, but net impairment losses increased, signaling possible issue with asset valuation or credit risk. Finance costs significantly reduced, reflecting changes in debt level or interest rate. Despite this cost management effort, profit before tax and overall profit for the year saw the substantial decline, with earnings per share also having its financial performance suggests the strategic intervention are necessary to address declining profitability and stabilize the company financial health. Astro cash flow statement from 2021 to 2023 highlight the adjustment made to convert profit before tax into net cash generated from operation, reflecting a declining trend in profitability. Key adjustments include deducting barter transaction, adding back non-cash expenses like amortization of contract costs, and subtracting non-operating income such as dividend income from unit trusts. Amortization of event license right and film library and program right are also added back as non-cash charge. Fair value adjustment on unit trust and derivative, along with foreign exchange and interest rate risk adjustment, further impact cash flow. This adjustment illustrates the complexity of converting accounting profit into cash flow, accounting for non-cash items and timing differences between revenue recognition and actual cash receipt payment. The analysis underscore the importance of cash flow in providing a true picture of company liquidity and financial health. Beyond what is shown in the income statement, understanding this adjustment is essential for accounting students to grasp the distinction between accurate accounting and actual cash flow.
The balance sheet data for Burmas from 2021 to 2023 show changes in assets, equity, and liabilities. Non-current assets slightly increased from 585,472 in 2021 to 612,681 in 2023, with notable growth in property, plant, and equipment. Current assets decreased from 288,104 in 2021 to 168,043 in 2023, primarily due to a drop in trade and other receivables. Total assets declined from 873,612 in 2021 to 780,724 in 2024. Equity attributable to equity holders of the parent fell to 626,239 in 2023, despite a rise in share capital and reserve. Total equity also decreased, mirroring the overall decline in assets. Non-current liabilities remain stable around 99,769 to 99,837. Current liabilities increased to 154,485 in 2023, driven by higher trade and other payables. Overall, total equity and liabilities align with the total assets, reflecting a balanced but contracting financial position over the period. The financial data from 2021 to 2023 shows significant growth for the company. Revenue increased from 3,096 million in 2021 to 6,520 million in 2023, with gross profit rising from 75 million to 126 million in the same period. Expenses also grew, with selling and distribution costs reaching 131 and 54 million and administrative expenses at 166 million by 2023. Profit before tax surged from 74,643 million in 2021 to 195 and 677 million in 2023. Despite fluctuation in income tax expenses, profit for the year improved from 74,401 million to 125,335 million, and total comprehensive income follow a similar trend, indicating strong financial health and robust growth. Cash flow data for Burmas from 2021 to 2023 show distinct trends in operating, investing, and financing activities. Operating cash flows improved, with net cash used decreasing from negative 3,128 in 2021 to negative 1,478 in 2023, indicating better management of operating expenses and tax. Investing cash flows fluctuated significantly, with a net outflow of negative 134,858 in 2021, turning to a positive inflow of 237,769 in 2023, due to increased dividends and interest received. Financing activities saw variable results, with net cash generated of 199,769 in 2021, turning to a net outflow of negative 251,762 in 2023, due to higher dividends paid and significant borrowing and repayments. Overall, cash and cash equivalents increased from 22,953 in 2021 to 42,196,000 in 2022, before slightly decreasing to 26,725 in 2023, reflecting the company's shifting cash flow dynamics over the period.
CIMB's balance sheet reveals a trend of growth in both assets and liabilities, with a focus on expanding investment and lending activities, while cash and short-term funds decreased from 22 billion to 19 billion. The company strategically increased other liquid assets and investment, such as investment account placements, financial instruments, and debt instruments. Loans, advance, and financing also grew significantly, reflecting an expansion in lending activities. On the liability side, customer deposits and placement of banks and other financial institutions and repurchase agreement all increased, indicating higher borrowing from other financial institutions. Equity shows steady growth, with ordinary share capital and reserve increasing, indicating retained earnings and new equity investments. Overall, CIMB balance sheet suggests a path of healthy expansion, but it will be essential to monitor liquidity and debt levels to ensure sustainable growth in the future. CIMB Bank demonstrated strong financial growth and improved profitability from 2021 to 2023. Interest income significantly increased, driven by expansion in interest-bearing assets or favorable shifts in interest rates. Despite rising interest expense, net interest income remains stable. The bank's Islamic banking operations show volatility, while net fee and commission income was reported at 2,534.60 in 2023. Other non-interest income declined, but net income consistently grew, reflecting robust overall revenue growth. Overhead costs increased, indicating rising operational expenses. However, profit before expected credit losses show a healthy increase, supported by better credit management or an improved economic environment. Overall, CIMB Bank's financial performance improved significantly, driven by expansion in core operations, effective credit risk management, and improved profitability. And then for the cash flow statement provides a comprehensive overview of the company's cash flow activities across 3 fiscal years. Profit before taxation and zakat increased significantly from 2,800 to 2,899,75 in 2021 to 5,458,46 in 2023. Adjustments for non-cash items and changes in working capital, such as depreciation and variation in inventories and receivables, were made to reconcile profit with net cash provided by operating activities. The company invested in growth through capital expenditures and managed its capital structure through share issuance and dividend payments. The net changes in cash and cash equivalents show a decrease from 29,361,500 in 2022 to 23,311,721 in 2023. Overall, the cash flow statement demonstrates the company's ability to generate cash from operations, invest in growth, and manage its capital structure. That's all.
The table shows Astro, Bermas, and CIMB's current ratio from 2021 to 2023, revealing Astro's stable ratio around 1.3. Bermas dropped from above 2, 1.088, and CIMB's steady ratio around 1.1, indicating each company ability to meet short-term obligations. The table shows Astro, Bermas, and CIMB's debt and equity ratio from 2021 to 2023, with Astro liabilities and equity decreasing, Bermas liabilities and equity dropping significantly, and CIMB's financial structure remaining stable with slight improvement. The table shows Astro, Bermas and CIMB's net profit margin from 2021 to 2023, highlighting Astro fluctuating profitability, Bermas consistent high margin around 1.0, and CIMB's overall improvement with some variability, indicating their efficiency in converting sales into profit. The table shows total asset turnover ratio from 2021 to 2023, with Astros decreasing from 0.220 to 0.170, Bermas improving from 0.085 to 0.161, and CIMB's slightly rising from 0.014 to 0.029, indicating varying trends in asset utilization efficiency. The table shows market value ratio from 2021 to 2023, with Astro market cap stable at 10,092 million before halving to 5,046 million in 2023. Bermas growing from 719.022 million to 109.101 million, and CIMB fluctuating from 117.7 million to 52.44 million, then recovering to 90.39 million, indicating differing investor sentiment and performance.
Vertical analysis have an analysis on cash flow statement. This method can be used by using individual item divided by total asset times 100. After reviewing CIMB Bank Berhad, Astro Malaysia Holding Berhad and Bermas Auto Berhad, first and foremost on 2021 in terms of current asset, CIMB record the highest with 99.99%, while Astro only have 4.31% and Bermas just 32.98%. Next, in terms of non-current asset, CIMB have a small number of percentage, which is 5.58%, while Astro got more with 95.69%, and Bermas with 67.02%. CIMB also have 10.45% on total equity, while Astro record 98.56% and Bermas with 74.96%. On the other hand, for year 2022, CIMB also record the highest percentage on current asset with 99.99%, while Astro just 1.87% and Bermas with 32.10%. Furthermore, on non-current asset, CIMB only record 2% lower from Astro that have 98.13% and 97.90% by Bermas. These three companies has equity with CIMB record 10.26%, Astro 99.78%, and Bermas 74.74%. Last but not least, for year assessment 2023, percentage that recorded by CIMB on current asset also the highest with 99.99%, while Astro 0.88% and Bermas with 21.52%. Other than that, on non-current assets, CIMB record 1.38%, while Astro 99.17% and Bermas 78.48%. Lastly, CIMB record 10.10% on total equity, while Astro got the highest percentage with 99.74% and Bermas 80.31%. In reviewing CIMB, Astro and Bermas income statement, there was significant difference between this company. Horizontal analysis can be calculated by using amount in comparison year minus amount in base year divided amount in base year. After calculating the amount of revenue of this company, CIMB show 21.47% and Bermas have 40% for year 2022. Unfortunately, Astro have negative percentage which is negative 4.32%, and this case show that Astro has a bad account performance. And then for your assessment 2023, the analysis of income statement for these three companies show a significant difference. For your information, the percentage of Astro in terms of revenue under horizontal method, they still record bad performance with a negative 28.99%. Usually, this percentage will give bad impact of the company. Next, CIMB continue to increase their revenue percentage from 31.47% in 2022 and 42.40% in 2023. Bermas have a little decreasing in percentage from last year with 20%. Astro financial performance from 2021 to 2022 shows a consistent downward trend. Revenue declined steadily over the 3-year period, leading to a significant drop in profitability. Despite effort to control operating expenses and finance costs, the company faced challenge in maintaining its market presence and sales operation. Despite in impairment losses in 2022 further impact profitability. Moving forward, Astro may need to consider strategy restructuring, revenue diversification, or aggressive cost management to improve its financial health. Based on the financial analysis of Bermat Automotive from 2021 to 2023, the company demonstrates stable and robust performance. Revenue increase consistent over the 3-year period with a significant growth rates. Gross profit align closely with revenue figures indicating effective market penetration. Other income and profit before tax also show positive trend. The company managed overhead expenses well as operation expanded. Finance costs initially rose but decreased slightly in 2023, possibly indicating that management effort. Profit for the year and dividend to shareholder increased significantly, reflecting the company's financial prosperity and commitment to shareholder return. Overall, Bermas has exhibited dynamic growth in revenue, profitability, and shareholder dividend over the analyzed period. Certainly, the financial performance of CIMB from 2021 to 2023 showcased robust growth, especially in core banking operations. Interest income saw significant increase, while interest expenses also rose, albeit at a faster rate. Despite this, CIMB maintained stable net interest income. Income from Islamic banking operations surged, but non-interest income declined. Overhead expenses were controlled and expected credit loss decreased. Profitability metrics, including profit before and after taxation, as well as earnings per share, show impressive growth. Overall, CIMB financial performance demonstrates strong growth, effective cost management, and improved asset quality, positioning the bank well in a dynamic banking environment.
In conclusion, overall, this analysis depicts Astro fluctuating and often declining economic metrics, Bermas preliminary robust but later declining overall performance, and CIMB's constant and slightly enhancing economic fitness. Each organization distinct monetary trajectory give precious insight into their operational performance and potential to meet economic duties. By knowledge, those economic dynamics stakeholders could make knowledgeable choices concerning investment, control, and strategic making plans for those companies. Thank you.